Thank you very much. Now I give the floor to Eniko Giori from EPP.
Thank you so much, Madam Chair. Madam President, welcome virtually to our meeting. I have two questions. The first one is rather short, concerning the TLTROs. You, in several earlier speeches, were emphasizing the importance of green investments. I would like to ask whether the ECB is planning to launch more TLTROs, this time with green objectives. This is my first question. And my second is a bit more philosophical, continuing along the lines of my colleagues. And you also mentioned the revision of the semester framework and the economic governance framework. And you have to know that in the European Parliament is a highly debated issue. And just a few weeks ago, we were unable to get to an agreement and adopt a report on the workings of the European semester, how to revise it and what to do. Even the Commission is planning it, right, you said, but then the COVID arrived and this kind of work has been stalled. Well, the dilemma here is how long and how lax we can be with our fiscal and economic policy rules. And the ECB is, of course, I think in a very right way, is pursuing loose monetary policies because we desperately need that for revitalizing our economy. My question is that what is, if you can say that, an optimal fiscal and monetary policy mix in the present days, and how long we can maintain these lax fiscal and monetary policies without causing durable and permanent damage. And we all know that the recovery instrument is also based on loans. So we are putting more debt on the shoulders of future generations. In Hungary, we have very bad experience in that. That's why we were very reluctant. But for the sake of solidarity, we were in favor of that instrument. I just would like to know your feelings about this package. Thank you.
Well, thank you very much for your three key items. Concerning the green targeted longer-term refinancing operation, as you know, many proposals, new ideas have been floated around, have been examined on possible ways to green our approach to portfolio management, particularly since we decided to launch our strategy review and include climate risk considerations as a key plank of it. So we are, and I personally am very happy to see that so many experts are really scratching their head, putting their brain and talent to the service of common good in favor of the environment, of biodiversity, of the fight against climate change. And we welcome the wealth of ideas, the proposals, the suggestions that is ensuing from their efforts. The various proposals that have been advanced and that have been considered so far differ greatly in scope, in aim, technical details, implementation aspects, and they all have some merits in that they are driven by the aspiration to green different options of the ECB portfolios or operations and promote sustainability in different segments of financial markets. But they also all present limitations, shortcomings, and still unresolved issues, chiefly amongst them the anchoring of those programs to a solid and objective definition of what constitutes a green or sustainable financial asset, while at the same time keeping the operational complexity and the administrative burden of the operations manageable for all the parties involved. So at this point in time, and despite all the efforts, including the efforts of the Parliament, and I personally, because this is something that I care very much about, I can't thank you enough for having moved deliberately on the green taxonomy front. I think that part of the way is completed. I know that more work is currently being done at the Commission level and in the various directorates, and I very much hope that the operationability as of January 1st, 2022 will be a fact. I still think that there is more work to do to define, the multiple shades of non-green, and to focus on how the transition can actually go forward and be financed. So it's a complicated matter, and not one where we can just say, "Oh, we'll have a green TLTROs." I wish this could work, but I don't think that it could be credible, and it's vitally important that all the efforts that we put in that direction be actually solid, documented, evidenced, and credible, because they will not be without controversy. But I can assure you that as part of the strategy review, we are going to address the whole gambit of our duties and our deliverables under the mandate that we have, which is price stability. But clearly, everybody has to do their job. The European Central Bank, and I find myself, by the way, in great agreement with my colleague from the Bundesbank, everybody has to do their work. No one can just escape their responsibility because it's too hard. And it would not be right to assume that the European Central Bank will take care of it all. And because the European Parliament has agreed on green taxonomy, then we're all on safe grounds. No. We all have to do our part under our respective obligations, duties, and in accordance with our mandate. And this is certainly what we will endeavour to do, looking at all operations from, the very down-to-earth operations of a building, of staff management, of organising ourselves, to monetary policy implementation. Now, you had a second question which had to do, and I'm afraid that I'm going a little bit in excess of the time, so I'll deal with that. What is the optimal policy mix between fiscal and monetary? Well, when I look at the current circumstances, what has worked extremely well is that the two worked hand in hand. And we did not intrude on each other's territory. I think we, certainly from the ECB perspective, we stayed within our mandate. Our independence was never threatened. We were not asked by any fiscal authority to do this or that. And I think that it's by this strict allegiance to what we had to do under our respective mission or mandate for us that we were effective. Thank you.
Thank you very much. Now I give the floor to Evelyn Regner from S.
So thank you very much, Chair. Good morning, Madame Lagarde. We're all aware of the impact monetary policy can have on job creation. And that being said, we need to acknowledge the fact that monetary policies are not neutral or sensitive in their very nature. That is, neither investment in job creation nor monetary policies itself are gender sensitive. And indeed, monetary policy often fail to consider trade-offs between reducing inflation to very low levels and supporting new employment opportunities with consequences for women's paid work. Nevertheless, the ECB can use its regulatory power to channel credit or buy specific bonds for purposes that promote gender equality. And as we have seen with the undertaken initiatives of the ECB to fight the climate crisis, for example. So my questions, are there any monetary policy measures or initiatives taken by the ECB to promote gender equality? And if so, would you be so kind to name a few initiatives? And if not, is the ECB considering doing more in this respect? Thank you.
Well, thank you very much for your question. Let me say at the outset that the European Central Bank, unlike others, has a single mandate, or shall I say a primary mandate, to which are attached possible secondary mandate without prejudice to the first one. And that primary mandate is focused on price stability. So is that a shortcoming? I would argue that no, because price stability, as we deliver it using the tools that we have, is procuring stabilization of the economy at large. And this price stability that we have as a mandate and the economy stabilization function that it results in is actually critically important for jobs to be created, for investment to be decided, and for those sectors of the economy that are most exposed to actually have that stability, have access to financing as well. So we can, through the price stability mandate that we have, endeavor to deliver the sort of concern that you have mentioned. Let me just give you an example. It is clear that at the moment, under this exogenous, symmetric, and very uneven shock in a way, or very uneven in terms of the recovery that is coming out of that shock, that some sectors are more affected than others. And those sectors, including predominantly service activity at large, but some particular sector like accommodation, hotels, tourism, traveling, are probably female labor intensive, more so than the industry which is coming out of that which has come out of that first wave in a better shape. So by providing financing, number one, from participating in market stabilizations, I think the ECB is playing its part under the constraints that it has, and with the mandate that it delivers upon, the ECB contributes to facilitating what is needed, which is a focus on the parts of the economy that are suffering, and as a result, the gender imbalance that is prevalent in those sectors. So I don't think that this is enough from my perspective, but this is what the monetary authority can do. More decisions have to be made on the fiscal front. More decisions have to be made and implemented on the political front. And I know that you are very concerned and focused on those. And the Parliament at large is and has been. Thank you.
Thank you very much. Now I give the floor to Engin Eroglu from Renew.
Ja, vielen Dank, Frau Vorsitzende, für das Wort. Ich hoffe, man versteht mich gut.
Thank you very much for giving me the floor. I hope that everyone can hear me. I'm very pleased that you come to our committee so often. Mrs. Lagarde, I really want to talk about the stability and ability to resist the crisis of the banks, because if we talk about the state-bank nexus, it's always important for us to hear what other experts have to say about these matters. And lately there was an interview in the Financial FAZ newspaper, and said that he was concerned about the digital euro and possible stability issues relating to the and so my specific question is, do you think that the digital euro could mean that in times of crisis, investors would invest their money in the digital euro, and that would result in a sort of bank run where the money is being taken away from the traditional banks? And I think that could be a crisis. I think that would be a real problem. And so I'd like to hear your opinion of that, and also to hear from you whether or not you think the digital euro poses other risks for us. Thank you.
Well, thank you very much for your question. Again, let me say at the outset that, number one, the digital euro, when it comes, and if it comes, because decision has not yet been made, will not be a substitute for cash. It will complement cash, but it would not substitute cash. So banknotes, coins will continue to be around for those who care more to have them than to have a digital euro. That's number one. Number two, it is not sort of a top-down approach. It is very much a bottom-up approach. We have seen over the course of time more and more Europeans rely on digital currency, rely on instant payment, rely on digital more than material payments. And that is clearly accelerated by the current circumstances. E-payments, instant payment, use of credit cards in those countries that were not very familiar with it has accelerated significantly. Number three, there is competition around. We all know that. And there are clearly networks that have significant ramifications around that are considering launching some sort of quasi-currency in the form of a stable coin. And I think it is with these three components in mind, in other words, no substitute for cash, clearly a response to the demand of the Europeans, and three, the necessity to be there first and foremost in order to deliver on serving the sovereignty of the Europeans vis-à-vis their currency, that we are looking very carefully at how a digital euro would look like. And if it can be less costly, more efficient, greener, and a better response to citizens' demand, we should certainly explore how we can eliminate or significantly mitigate the downside of a potential digital currency. And I can assure you that it is with that in mind that the ECB would not want to impair its monetary policy as such, nor its monetary policy transmission channel. And clearly it is not with a view to substituting the bank intermediaries that we are looking at how such digital currency would be constructed and on which backbone it would be supported. So I hope I have addressed the questions and the concerns that you had. Thank you.
Thank you. Thank you very much. Now I give the floor to José Manuel García Margallo y Marfil from EPP.
Chair, Mr. Margallo has a connection problem. It will reconnect soon, so maybe you could go to the next speaker and then it should be in the system.
Okay, let's move on to the next speaker, Gunnar Beck from ID.
Good morning, Madame Lagarde. Let me clarify right away that at present, of course, we are not opposed to increased public spending, although for limited purposes, such as health or job protection at national level. Now, in response to the corona epidemic, the ECB has since March bought bonds and other securities for around 870 billion euros, equivalent to around 7.3% of the Eurozone GDP. Mr. Draghi previously printed trillions. Despite this, the GDP in the Eurozone has contracted more steeply than in the rest EU, the US, Japan, and the OECD average. Now, last time I asked you if you could draw our attention to a single historical example where massive money creation has led to sustained economic growth before the policy was abandoned. My question is, how large does the ECB balance sheet have to be, or how far would the Eurozone GDP have to decline before you would consider abandoning the policy you inherited from Mr. Draghi? Now, just to round off, please let me add that I do not like asking these questions. I know that economic growth is the result of many policies and factors, but I cannot ask you to comment on policies others are responsible for. However, if the Eurozone has been growing more slowly than the rest of the world and our economy is now contracting faster, is this exclusively the fault of our governments and not also, to some extent, the ECB's? Thank you.
Well, thank you very much for your points and for your questions. I would like to, first of all, address the issue that you raised first, which is the issue of public spending. You know, what we are observing under the current circumstances is a concern, a lack of confidence, a huge uncertainty on the part of pretty much all economic operators. When I look at the investment numbers, when I look at the consumption numbers, when I look at the PMI and the high frequency indicators, everywhere, wherever you look, you see, and I must have repeated that 10 times in my introductory remarks, and it's the word that I hear from those who try to analyze the situation: uncertainty. And it's also a fact that in the face of that uncertainty, the entities, the policymakers that are relied upon, that are eventually one of the few sources of some certainty, are the public entities. Now, you might have your own view, your own judgment, but that's what we see. And that's what we also hear from the surveys and the consumers testing that we do, and the corporate world as well. And we know that, and we've seen that when there is public investment, and that's been historically demonstrated, but when there is public investment in those times of great uncertainty, it kickstarts and it fosters private investment, which is so badly needed and which is called for if we want to escape this current economic crisis. So from a macroeconomic point of view, it's really fully justifiable that public investment be first and foremost at the moment, in order to stimulate what has to come next, which is private investment and the return of confidence for the economic operators. Now, I would observe, in terms of what we have done, that the size of our pandemic emergency program, the very high take-up of our TLTROs, and the results that have been generated when I look at all possible indicators: volume of lending, rates at which loans are made available, stability in the financial markets, financing condition in general, and all that go in the direction of supporting the policies that we have deployed. And I don't think that there was any alternative, and that there is any alternative under the current circumstances. Thank you.
Thank you very much. I don't know if Mr. Garcia Margallo is connected now.
Not yet, Chair. He's trying to connect, but
yet,
we can still go to the next speaker.
Yes. So I give the floor to Joachim Schuster from SND.
Ja, vielen Dank.
Yes, thank you very much. So I hope we could catch up the time that we've been losing. In any case, you said that there was good cooperation between monetary policy and fiscal policy. But that wasn't always the case before the crisis. But it seems that, again, we have an issue. Poland and Hungary, for selfish nationalist reasons, are trying to block the EU budget and recovery plan. Now, in the treaties, they talk about creating a currency union and a single market, a common economic and monetary policy, but financing policy is entirely in the hands of the member states. The question now is, what should happen after this crisis? Should the debts be reduced, and what is the perspective in time terms? What will the interest rates be? We actually could find negative consequences from unwinding our debt. And this could also be bad for inflation. So there has to be a harmony between monetary and fiscal policy. So that's the context for my question. Madame Lagarde, what do you and the ECB see as the future of monetary and fiscal policy? Is it just enough to go back to the situation before the crisis, or should we be thinking about interinstitutional reforms of the euro system? And what do you think would be the key aspects?
Is he done? Yeah. But thank you very much for both the context and the question. And I would totally agree with you that in the current crisis we have seen effective cooperation between the fiscal policies and the monetary policy. And I would also submit that there has been no dominance by fiscal of monetary policy, and monetary policy has kept its own dominance and the ECB has remained totally independent throughout. So I'm not suggesting that it's a perfect combination, but it has been a very effective coordination. You know, I think when I like to give examples, and I realize that I have not given any single example of that cooperation and coordination between fiscal and monetary that was not intended, not thought through, but clearly was effective and was decided respectively by the authorities. And that is clearly the necessary financing of the economy, where on the one hand, we put together very early on the 18th of June, an extremely attractive targeted longer-term refinancing operations, which was even, improved in June, and which had a magnificent, I withdraw magnificent because this is probably not proper jargon, but which had a very significant take-up. And on the other hand, the fiscal authorities decided respectively at the national level and then at the European level to put in place those guarantee schemes, without which banks probably would have been a bit more reticent to lend to the firms, to the corporates, to the SMEs, to the entrepreneurs. So you had with that the example of a demand, the financing available, and the guarantee schemes that were put in place at the national level and topped up when it's in place by the European Investment Bank, which has also a window that has been decided and which needs to be completely fleshed in order to top up those guarantees. So that's a typical example of where monetary policy and fiscal policies actually hand in hand responded to a need that was critical in order to sustain the recovery and help with the economy. As you have observed, interest rates, part of the traditional toolkit of a central bank, are at very low level at the moment. And we have forward guidance in place that is also part of the toolbox that will indicate if and when the interest rates will move. And if you observe that, and if you read all the commentators about timing, I think that the issue of interest rate hikes should not be an immediate concern for any of those of you who are interested in those rates. In terms of debt, I think I've said already that the volume of debt and the ratios that are used, debt to GDP, are a factor of both element of the fraction. And that every effort that we make in order to steer growth, in order to increase GDP in a sustainable way, will indeed aim at reducing the debt to GDP ratio, which is calculated accordingly at the moment. I think that another area where clearly fiscal authorities have played their part in helping monetary policy play its role and support the economy is when it used tools that exist under the Stability and Growth Pact, like the escape clause, which was indeed lifted early enough in order to encourage national authorities to do what they had to do. In the same way, the state aid conditions were also lifted in order to help the support of some particularly affected areas. So I think that all the attributes of those pacts that were agreed have to be looked at carefully, and I know that this will be under review by the Commission, and that there will be a prolonged debate on those matters in order to best address the situation. But I would simply observe that there are tools in that which have been useful and serve the current circumstances as well. Thank you.
Thank you very much. Now I give the floor to Henrike Hahn from the Greens.
Thanks for being with us today, dear Madame Lagarde. COVID-19 has shifted the public focus away from the immense physical climate risks that we are facing today and we will face in the future. And bushfires, floods and hurricanes have, besides the unbearable loss of people, plants and animal lives, a devastating effect on economies and financial stability. In the past, banks have treated climate change, often through corporate social responsibility, as a reputational risk only. However, it is evident that physical climate risks must be adequately accounted for in the financial assessment and risk management frameworks of banks. And this year, the Bank of International Settlements published a survey on 27 supervisory bodies, including the ECB and EBA, on their initiatives on climate-related financial risks. A large majority of respondents noted that right now they do not have an explicit mandate, but they also say that such risks can have strong impact on the safety of individual banks and can pose potential stability concerns for the financial system. So far, the ECB has focused on raising awareness and providing guidance, but the ECB has not implemented effective supervisory measures for the banks related to climate risks. So I think this is not enough, being confronted with the tremendous challenges of climate change we are confronted with at the moment. And I would therefore like to know, what is the roadmap on implementing measures to include climate risks in the supervisory mechanism and to ensure in a very clear way that banks manage climate risks properly to increase financial stability? Thank you very much.
Well, thank you. Oops, it's the supervisory business. So I think Henria has. Am I on?
You are here, Ms. Lagarde.
Good. Well, I'm sorry for this slippage, but I was just thinking that part of your question addresses the supervisory arm of the ECB, over which I believe Andrea Enria is also heard before your Econ committee, but. Having said that, because I'm very focused about those climate issues and concerned that we look at all areas where we can deliver within our mandate, I know that the SSM has actually issued now the guidelines which banks have to observe and have to follow, we very much hope, in order to identify the climate risks that they are carrying and in order to be able to report on those risks. My recollection is that this has to be activated and effective in 2022 so that banks actually report those risks that really matter a lot. The European Central Bank, as you know, is a member of the NGSFS, which is the network for green finance, and is taking an active part in that network. I'm particularly pleased that the current chair of the NGFS, Frank Edelson, received your approval in its candidacy for becoming a member of the executive board of the ECB. And I'm delighted that he will bring his knowledge, his in-depth concern and passion for these particular causes, in which I would actually include biodiversity, as I'm sure you would too. So in a nutshell, the supervisory arm of the ECB is taking those matters very seriously, is putting the system under pressure in accordance with proper risk management, because those are clear risks that have to be reported, that have to be reflected in the banks and in the banking system under the supervision of the SSM. And in the banking side of the ECB, clearly, as part of our strategy review, We are going to look at all the portfolios, our own portfolios and the portfolios that we have under our monetary policy, to see how we can best deliver in accordance with our mandate, without determining by ourselves what would be the right pricing, because this is not something that is within the jurisdiction of the ECB. It is for the policymakers in the legislative and in the executive branch to actually do so, and to instrument and activate those from the private sector, including, for instance, the IFRS, in order to identify properly, record and account for those risks, so that proper pricing is actually reflected. So it's in those directions, as well as, and I will conclude with that, taking into account climate change risks, as well as climate change developments, as you've alluded to, that we can also properly measure our price stability objective. Just to give you an example, how do we determine inflation? How do we anticipate inflation if we have massive recurrence of catastrophic weather development? How do we measure inflation if a carbon tax is finally implemented at the right level? These two components have a direct or indirect impact on our inflation aim, and it matters enormously for our price stability mandate. So those are, as I said, two examples from a risk management point of view on the supervisory side, and from a pure monetary policy aim, climate change actually matters. Thank you.
Thank you very much. In the meantime, Mr. Garcia Margallo managed to overcome the connection problem, so I will give him the floor now for his question.
Mr. Margallo, you can press the speak button. Mr. Margallo, we could briefly hear you. Can you please press the speak button?
Press the speak button. It's okay now?
We can hear you.
Okay, we don't have much time, so while Mr. Margallo tries to resolve the problem, let's move on to the next speaker, Agnès Evren from EPP.
Je vous remercie, Madame la Présidente. C'est un plaisir d'avoir Christine Lagarde avec nous aujourd'hui.
Thank you very much, President. It's a great pleasure to have Christine Lagarde with us. COVID-19 and social distancing rules have completely overturned things for us. And since March, we have seen a considerable increase in the number of contactless payments being made. But a recent study showed that some of our citizens are worried about the lack of security for this type of payment system. So I have two questions, Mrs. Lagarde. It's true that there are risks such as cyber attacks or fraud, and there's a problem of confidence. And all of this is a threat to monetary stability. And given that the ECB is going to be publishing a study by consumers about consumers' views of this, could you tell us the lessons that have been learned from the study, and also the need that we have at the moment to create this link between people's confidence and the use of these payment systems to create confidence? Thank you.
Well, thank you very much. Merci beaucoup for your question, and c'est un plaisir aussi de vous.
It's also a great pleasure to hear from you.
We issued a paper on in early October, around the 8th or 10th of October, I can't remember, which really explored in depth the characteristics of a retail digital euro. And in so doing, we've identified the cost, the benefit, the risks, the upside, the response that we could provide. And after that, we launched the consultation, which started in mid-October and which will close in mid-January. So I don't have yet any outcome of the consultation that I can share with you, because frankly, I don't know yet what's in there. I know that there's been a lot of participation from the usual suspects, and we will be very attentive to that. But there's been also a lot of just genuine public comments and views expressed about it. And we will, of course, take stock of that when we move to the Governing Council to propose that we actually launch a project. And I'm very careful when I say launch a project, because obviously, in addition to the monetary policy concern, the monetary policy channel concern, the financial stability concern, there is also, as you said, the security concern, and that includes both the risk of intrusion and the whole category of the cyber risks, but there is also the risk that private information be kept private and be secured, so that consumers of digital payments be protected in their privacy. And this is a really important key element that will be taken into account. But because of all this range of issues that have to be addressed, in addition to the technological choice that will be also looked at, it's not a project that is going to be a 6 months project, not even a 1 year project. It is going to take certainly longer than that, and there will be more consultation to be had. In the meantime, what I think is really important is that the work that the Commission is doing under the name MICA, which I'm sure you're familiar, is critically important, because the principle that same activity, same business, same rules has to apply. And as we all know, there are new entrants in this market, and they need to be under the same regulation, the same supervision, and be accountable to the same high standards, including on privacy, including on use of personal data and any data for that matter. So I'm giving you a sort of a twofold answer. What we are doing, which will be very public and very transparent, and what you are putting in place, and which is also critically important in order to protect stability, privacy, and security. Thank you.
Thank you very much. Now I give the floor to Eugene Jurzyka from ECR.
Thank you very much. Madame Lagarde, I would like to ask you following question. ECB is going to start buying green bonds as well as accepting them as a collateral from the very beginning of the next year. I would like to express my concerns that the green bonds might breach to some extent ECB's mandate. The primary objective of the ECB monetary policy is to maintain price stability. Monetary policy should therefore be independent and neutral to the greatest extent possible. Yet one could claim that buying bonds of certain companies that are labeled green breaks the importance of neutrality principle. To what extent do you consider tackling climate change and environmental issues as being part of the ECB's mandate? Using similar logic, could the ECB in the future start buying, for example, bonds of pharmaceutical companies with the argument that public health is an important factor for the growth of the economy. Thank you for your attention.
Well, thank you very much for your question. First of all, I would observe that we already buy green bonds. I think that, excuse me, as part of its purchase programs, the ECB probably buys. I mean, I could check the numbers and confirm that to you, but the ECB buys about 20% of the available green bonds at the moment, and we are seeing more green bonds issuance as we speak, and from many corners of the euro area. So I don't think that particular set and trend of purchases is going to go down in terms of volume, if not in terms of percentage. So we do that already, and we do accept them as collaterals already. What I think you're referring to is a decision that has been made to actually accept a particular derogation in terms of the structure of the the green bonds that we accept, which provides for a variable coupon as opposed to a fixed coupon, which was the rule previously. And that will certainly help buying, or rather accepting as collaterals, some of those green bonds, because quite a few of them are climate related and therefore have an element of uncertainty about it and adherence to the climate related objectives. So that's what will come in place as of the 1st of January. But I think you're referring to a sort of a broader question, which has to do with the role played by climate change imperatives and the respect of our environment and of our biodiversity in our monetary policy. And to the risk of repeating myself, this is a matter that will be debated at large within the Governing Council as part of our strategy review, because I believe for myself that we should look within our mandate and in accordance with the provisions of the treaty that require, number one, that we pursue price stability as our primary mandate, with secondary objectives that are laid out as well, and observing free market principles to the extent that free market principles are supported by appropriate information and risk assessments, that we operate as such. Well, two things. One is, I believe that when it comes to measuring price stability, as I said earlier on, the issue of direct or indirect climate change have an impact, no question about it. Number two, I believe that in terms of what tools we have and what maneuvering room we have in order to set inflation, we have to be mindful of the natural interest rate, which, as you know, has lowered over the course of time, but could continue to lower eventually if we were to see even much more savings by Europeans, because they are concerned, because they are afraid that climate change is going to be upon them, and therefore they have to save more. And in our assessment, we also have to be mindful of climate change. So in that respect, I think climate change has a direct impact on how we measure our price stability objective, how we deliver on it, and how that impacts on our monetary policy portfolio management will be determined, number one, by the Governing Council as part of its duties on the basis of what I have mentioned. In other words, the terms of the treaty and the requirement to operate in accordance with free market rules. Well, we'll go in details on these market rules principles to see whether future reporting requirements, future risk disclosures, and the transparency that operators will be called upon to deliver will actually have an impact on how we deal with our collaterals and how we deal with our straight asset purchases. Thank you very much.
Thank you very much. Let's do a last attempt with Mr. Garcia Margallo.
It's okay? Can you hear me now?
We can hear you and we can see you, Mr. Margallo. Thank you.
Well, thank you at the end. I'm very happy. Bueno, primero.
First of all, declaration. Secondly, a comment, and third, a problem. My declaration is that there are no reasonable alternatives to the measures that have been adopted up till now by the central bank: the interest rates, liquidity, and the purchase of bonds, which is something that I feel is perfectly adjusted to reality. Now, secondly, flexibilization of the Stability and Growth Pact and the recovery plan needs to be implemented as soon as possible. Now, my comment is that member states, thanks to the Commission and the actions of the Central Bank, are putting reasonable conditions. And this flexibility, which is logical, applies to those countries which have greater fiscal margin, but it's also been convenient for those who have less flexibility. My question here is, solely from the point of view of political rationality, leaving the rest aside, is it reasonable for those countries who have less margin continue to turn to the markets, or should they turn to the stability framework program? Now, up till now, if there's no problem for countries in a medium term, as the markets start to discriminate and select and prioritize those countries depending on the size of their dates and structural deficits, and in particular their credibility, vigilance, so that the money coming in from one way or another should continue to be targeted to reform programs and other such things, I think is key. And the central bank plays a key role here, and I think that the fact that its chair is head of the Systemic Risk Board is important as well. In the medium plan, do you think that there is going to be a discrimination from the markets which might cause a diversification between the prime risks between the different countries, or am I wrong in thinking that? Thank you.
Thank you so much. You give me a chance to say a couple of things, actually. One is I'm not sure that political and rationality actually go well together. I have not met political rationality much in my short but intense political career in a previous life. But be it as it may, I would simply like to say that what we have done, and in particular with the pandemic emergency purchase program, is something that we are really proud of, because it has been effective, because it has been rapid, and because it has really responded to the dual function that was assigned to it. And as such, it was clearly, and it is, a monetary policy instrument, therefore associated with no conditionality. So I cannot opine on what the markets think. I'm not the markets. We are the European Central Bank, and we do what we have to do under the circumstances in order to deliver on our mandate. Thank you.
Mr. Margallo, if you want, you have some time for a follow-up. Otherwise, we can move on. Okay, so I don't see requests for a follow-up. I had actually a request for a catch the eye. I had two, but I cannot give the floor to two members of the non-ASCRI, because these are the rules that the coordinators have set for the catch the eye. So I give the floor to the first request that I received, Mr. Lefteris Nicolaou Albanos, but please just 1 minute, because we are way over time. Thank you. Mr. Nicolau Alavanos, are you connected?
He is connected, Chair.
Can I ask what is happening? I don't see.
There seems to be a connection issue, Chair.
Okay, I am really sorry, but we are like 11 minutes over time. So maybe we can, move on to the next hearing, and if he can ask the catch the eye for the end of the next hearing, which is still with President Lagarde.
Do I have the floor? Connection is reinstated.
Yes, please go ahead. Just 1 minute, please. Thank you.
I was speaking in Greek. Πολλές φορές έχουμε συζητήσει.
Many times we have discussed how we want to create capital markets and the various requirements that exist.